Hello and welcome everyone to my channel, The Quality Investor. With earnings season in full swing, I've been providing commentary on various businesses and their results. This is a way for me to see if my investment thesis remains intact if it is an investment I hold. This morning, McDonald's, ticker MCD, released their earnings. McDonald's has had a very flat revenue in the last 10 years. However, in the last couple of years, they're starting to finally pick up a little bit on both revenue and earnings. They had a beat on earnings per share, but missed slightly on revenue. In my view, McDonald's is on the slow growth side of things. However, they do have a very strong record of returning capital to shareholders via dividends and share repurchases. And that 10% dividend increase last quarter, that means they're 3 years away from the coveted dividend king status. However, over the next decade, McDonald's has some initiatives that are in their pipeline that I believe will drive new growth and thus higher returns. Therefore, my investment thesis for McDonald's is simple. Point 1. McDonald's is effectively a landlord owning the real estate most of the restaurants are located on and collecting rent checks along with royalty fees. This allows for 50% plus gross margins. Point 2. They are investing heavily in digital ordering and AI to drive down food prep times even more. A colleague of mine who is a former McDonald's executive told me they are using AI to predict a customer's habits. For example, an individual goes to lunch every Monday for a Big Mac. Instead of having to place an order, the AI will place an order for him, and all the person must do is go to the restaurant to grab it. We'll see if they can pull this off. Point 3. They are moving to push marketing and selling costs down to the franchise level, thus saving more on SG&A overhead at the corporate level and expanding margins further. Point 4. They reward shareholders with growing their dividend and share repurchases. All right, let's get into the earnings. But first, if you enjoy content like this, please hit that like button and subscribe to the channel. Also, don't forget to share this video and hit that notification bell so you can know right away when I post more stock analysis content. Looking at McDonald's stock price at the close of business today, it is at $285.97. They fell 3.75% after the earnings release. The narrative in the news around the decline is that McDonald's says Middle East turmoil is hurting its business. This article notes here, but sales in its licensed markets business, of which the Middle East companies are a part, grew just 0.7% in the last quarter as a result of the tensions. That was far worse than the more than 4% growth in the United States and other international businesses. The CEO also reinforced that on the earnings call, saying that they are seeing a pronounced impact in the Middle East and other Muslim countries like Malaysia and Indonesia. The CEO also reinforced that so long as this conflict, this war is going on, we're not making any plans. We're not expecting to see any significant improvement in this. So there is some impact. However, the international development markets, of which the Middle East is a part, only represent 10% of McDonald's total revenues. So while there may be some slight slowdown in growth in that particular area of the world, I think in total for McDonald's is not that big of a concern. So like I said, we are starting to see some real growth for McDonald's again. You had the revenues up 10% year over year, operating income 24% year over year, net income up 37% year over year, and at $11.56 per share, we have our earnings per share up 39% year over year. McDonald's has been flat for a while, so it's good to see actual growth again. Looking at their cash flows real fast, I've stated on this channel many times that I believe free cash flow is one of the most important metrics to look at. And we can see here that McDonald's grew their free cash flow to $7.2 billion for the year, up 32% over the prior year. Real cash flow growth again for McDonald's. So taking into consideration the slight slowdown in revenues for their Middle East areas and the free cash flow growth, what is McDonald's valuation standing at now? So we're looking at my growth rate projections here for McDonald's, and a couple of things I do want to point out before getting into the rates themselves is that their operating margin expanded to 45.95% from 44.62% in 2022, and the net income margin expanded as well to 33.22%, up from 26.65% in fiscal year of 2022. And based on analyst estimates revised down slightly from that Middle East news, they're projecting revenue growth at about 5.8% for next year, operating income to have a margin of about 46.25%, net income at a 33% margin, and free cash flow coming in at 89 cents free cash flow conversion, meaning they're converting 89 cents for every dollar of net income into free cash flow. So I want to point out the assumptions I'm making here for both my revenue and then the other financial statement assumptions. So for revenue here, the company is organized into company operated restaurants, franchise operated restaurants, and other revenues. And you can see here, this is the 5-year compound annual growth rate for each of these segments. And then I have a bear case, a base case, and a bull case. So using the base case as our starting point here, you can see that the projecting out over the next 10 years, revenue growth for company operated restaurants at 5.9%, 6.82% for franchise operated restaurants, and then 2% for other revenues. Looking at all three cases here, you can see the total revenue growth that I'm using for my projections over the next 10 years is 4.4% for the bear case, 6.4% for the base case, and 8.6% for the bull case. And this bull case with 8.66% revenue growth, this assumes that McDonald's really hits with their AI investments. Now, looking at the rest of the 10-year compound annual growth rates here, currently what they're doing for operating income, for example, they've grown at 3.24% per annum in the last 10 years. The bear case is at 4.7%, 6.9% for my base case, and 9.36% growth for operating income in the bull case. The way I'm projecting my margins here, operating margin in year 10, 47% for the bear, 48% for base, and 49% for the bull, meaning they will expand their current margin to that level by year 10. The same applies for the net margin and the free cash flow margin. So for free cash flow, for example, I am projecting that on the bull case that they'll expand that free cash flow margin to 35.9% by year 10, the base case to 34.2%, and at 32.5% for the bear case. One quick note, 10 years ago, the free cash flow margin for McDonald's was about 16%. And finally, like I mentioned, we're starting to see real growth on the free cash flow. And at the end of the day, that's what we're discounting, the free cash flow back to the current value. The current 10-year annual growth rate for free cash flow is at 5.4%. My bear case has it at 5.9%, 8.4% for the base case, and 11.2% free cash flow growth per year for the next 10 years for the bull case. So after running all the numbers for McDonald's on the base case, our discounted cash flow comes out to $267.19. A couple things I do want to point out over here is they've been doing a very good job increasing their margins, both gross and operating margins, as well as improving on their returns on invested capital and returns on capital employed. Remember, returns on invested capital and capital employed are measures of management's ability to effectively allocate capital and return that through net income. So you can see they're well above their 5 and 10-year averages for all of these profitability metrics. Another strength for McDonald's is their dividend. Their current dividend will pay a total of $6.68. This is not updated yet for the current dividend. However, using that number, our dividend discount model now is giving us a price of $390.60. This assumes that they are growing their dividend at about 8% per year, which is slightly below what their most recent dividend increase was, and a perpetual dividend growth rate of 6.25%. Their exit multiple is sitting at $375.11. The comps I am using for McDonald's are Starbucks, Chipotle, Yum Brands, Restaurant Brands International, and Darden Restaurants. So putting the bear, base, and bull cases together, let me just show you what a summary of all of those look like. We have a share price now of $285.97. And when using the bear assumptions that I showed you before, we get a valuation average here of $285.92. Basically what they're trading at right now. Base, our valuation average is at $318.65. And for the bull case, we have a valuation average of $363.11. So there's some upside for the base and a lot of upside for the bull case. If we use a margin of safety at 10%, that will give us an acceptable buy price of $257.33 for the bear, $286.79 for the base, and 326.80 for the bull case. Essentially, with the bear case, that's a recommendation of wait, and we want to see that PE ratio to come down to about 22.2. For the base case, it's essentially a buy right now. It might even go above that tomorrow, but if you're comfortable with that 10% margin of safety, and that margin of safety is really a measure of your own risk and belief in the future of that company. If you believe that McDonald's is safe going forward in the future, and you have a pretty high tolerance of risk, then maybe a 10% margin of safety is all you need. And that means right now, for the base case, they're priced about right. And for the bull case, there's still a lot of upside there. The desired PE here is at 28.2. So it can expand that PE quite a bit before it reaches the bull acceptable buy price of $326.80. However, if you're a little bit more risk averse, or you're a little less confident in the future of McDonald's, margin of safety of 20% will give you an acceptable buy price of $228.74 for the bear case, $254.92 for the base, and $290.49 for the bull case, meaning you're gonna have to see some pretty appreciable price decline before you're willing to buy into McDonald's right now. So before we go, I do want to emphasize this is not financial advice, and I do own a stake in McDonald's. With that, thank you for watching today's video. And what do you think? Let me know in the comments below. Also, please hit that like button. And if you found this content useful, consider subscribing to the channel and joining our community. Thank you and happy investing.